Hi friends, good day. I hope and pray that your trading journey is going awesome and all are in profits. As discussed over our closed group, I have come up with the explanations how to use the indicator MT4 supply-demand zone. As the name suggests, it has been inspired by an indicator from MT4 platform. I adapted the idea and coded it in PineScript. Though it is named supply-demand zone, but it also accommodates a few more things to assist in analyzing the market structure and probable movements. Without any further ado, let me start the video and explain the settings one by one and how it can be altered to help you for analyzing the market. Please note that this indicator can be used for all segments like stocks, futures, options, forex, and crypto irrespective of the time frames. The indicator output on the chart is like this when you first time apply it on any chart. As clear from the name, the thick boxes above and below are the supply and demand zones respectively. The gray color boxes are supply zone, and aqua color boxes are demand zones. As I personally use dark theme in my setup, so the colors have been kept suiting the dark theme. However, there are options to change the colors to suit your preferences. Let me open the settings panel. You can see in the settings there is a drop-down menu which tells about the zone width basis. As per the default setting, the zone width has been kept as high-low body. High-low body means it is considering the swing high and swing low, and some portion of the candle body. You can change to any one in the drop-down menu and see what the outcome is. Let me change it to high-low only. Now you can see how the zones have been altered and how your supply and demand areas are showing up. Please remember that in any chart, there is no hard and fast supply and demand zones, and hence any one selected in the drop-down menu will give you the zones which definitely can be considered for analyzing the chart. Let us change it to RSI-based. Now the whole scenario has been changed and given insight of how the RSI had been in past. Let us change the time frame and apply another item from the drop-down list to understand how it can help us to analyze the probable movement. Now we are changing it to equal high and low. I changed it to the lower time frame as equal high-low is very rare in daily or above time frames. Equal high and low means it will take some consecutive candles, here it is 3, and compare their high or low values with some percentage as mentioned here in this box. The lower percentage value will give you lesser numbers of zones with lesser thickness and vice versa. It is frequent on lower time frames like 15 minutes, 5 minutes, etc. It may be worthwhile to note that the equal low interprets as the possible upside movement and equal high interprets as the possible downside movement. You can see that the supply and demand zones are completely different than what we were visualizing in case of swing high and low. Now check for the period of lookback, which is just below the drop-down menu. The lookback period by default is 13. However, this lookback period, when higher, it means that the zones will be less with bigger gaps, and if smaller, the zones will be more. It can be interpreted as if you keep smaller value for the lookback period. You can aim for small targets, and if you keep the value bigger, you can keep your target bigger. As such market does not behave as per our expectations, we can easily take multiple smaller targets to achieve a big target. I forgot to mention that when a fresh zone is breached by the close of a candle, then the color will change. The supply zone will become a demand zone, and the demand zone will become supply zone, and the color will be darker than that of the fresh zones. If the converted zone is again breached by the close of a candle, then that zone will disappear, and a new zone may or may not be formed depending upon the price action conditions. Here you can see the labels as only price or price and time, since when the zone is sustaining. Also, if you select the Show Retest Count, it will show how many times a zone has been retested inside the zone box. Now let us come to the balanced price range, BPR indication. You all know about fair value gap, FVG. The BPR is formed either by two consecutives, bullish FVG and bearish FVG, within 10 candles range, which will be represented as bearish BPR. And if it is formed by two consecutive bearish FVG and bullish FVG, then it will be called bullish BPR. Note the order of the formation of the FVG mentioned in the statement. BPR is such a zone that the price is strong there and has a chance of attracting the price to that zone, and possibly have a reversal from that zone. This can be seen very frequently in Forex and crypto market, whereas it is less frequent in Indian stock market. The red band indicates a bearish BPR, and the green band indicates the bullish BPR. In your chart, you can keep it on and check how the market is behaving after formation of any BPR, and it will give you a pretty good idea about the probable price direction when you do an actual trade. We go to the next setting of Hilega-Malega indicator by NK Stock Talk. As such, the main indicator is a chart indicator. HM indicator cannot be shown in this chart, but the logic has been taken into account and the corresponding buy and sell signals have been incorporated in the chart. Those signals will appear as blue and yellow dots corresponding to buy and sell signals respectively. However, the indicator logic has been slightly modified to get better. Buy and sell signals depending upon the conditions mentioned in the drop-down menu at the end of this HM section. You can see a few conditions mentioned therein, for which the explanations have been provided in the tooltip just beside the drop-down menu. You select the condition from the drop-down menu, and you get different buy and sell signals which can be used as per your suitability. Please remember that these buy and sell signals are not the trade advice, rather it indicates a probable direction of the market from next candle onwards. We also have a trend line in this indicator. This trend line gives you a fair idea about the trend of the market or the chart on which you have placed this indicator. When we put this indicator on, our trend line with two colors appear on the chart. It takes up with time to load the trend line because of the calculations it is performing in the background for the candles available on the chart. Now you can see the trend line is visible now, and it gives a fair idea how a trend is formed and how long it is lasting. This definitely gives a fair idea about the market direction and corresponding help in identifying the trade decisions. Always remember, use this tool to analyze the direction and possible movement of the market, but take your trades on your own research analysis and any suitable advice you are getting from your registered and competent financial advisor. This trend line also has a trailing stop-loss line indicator, which gives you the possible idea of how you can trail your trade positions if you take your trade on your own decision, depending on this indicator. The trailing stop-loss line has been provided in orange and blue color, where the orange trailing stop-loss line is for the short trade, and the blue trailing stop-loss line is for the long trade. This trailing stop-loss helps you identify the entry condition of a trade where the stop-loss is low. The significance of the ATR period and the ATR factor are that if you put more period and more factor, the trend line will be closer to the candles, and if you put less, the trend line will be away from the candles. Lesser value can result into less numbers of false signals, however the change in trend direction will appear late. Now we are coming back to the settings again and enabling the volume spikes. Once we enable the volume spikes, you can see volume spike arrows showing up in the candle. It takes some time to load the volume spike and show the approximate price where the volume spike has taken place. Please note that when any big player enters the market, they can hide the price at which they have taken the trade, but it's impossible to hide the quantum of the trade taken, which is denoted by volume. So, a sudden spike in volume denotes an imminent and significant price movement is going to take place. In this case, the volume spike has happened at the end of a trend, and as soon as the next candle price crossed above the price level on closing basis, the market took a U-turn. You are observing right now at such a scenario where the price took the reversal trend. Let me show you some other charts where the volume spike resulted in trend continuation. In second chart, You can see the trend has been continued as the price sustained above the volume spike price level and wind up and up. So this volume spike also helps you in analyzing the price trend of any instrument you're interested in. Please remember that nothing is 100% in price action or price movement. But in general, this tool helps you in analyzing and visualizing the probable and possible price movement direction. In any case, you are advised to do a proper backtest to ascertain the percentage of probability for the price movement along the direction or in the opposite direction. Please note that the arrows shown on the candles at upside or downside of the candles don't indicate that the probability of price movement will be in that direction. It is simply put on the upside of a green candle and in the downside of a red candle, and different colors of the arrows are to show the intensity of the volume spike. And now the last part of the indicator, which is at-a-glance view of the chart. This can be enabled or disabled at Settings tab at the bottom. It presents 2 consecutive time, and the magnitude of the volume spikes at the first row, apart from the header row. In the second row, it represents the CPR of the current day and the CPR of next day. It is well known that when the CPR is very narrow, then there is a high possibility of the big price movement. In the same row, we can also visualize what is tomorrow's CPR, and accordingly, we can have a fair idea about the possible price movement of the instrument. In the third row, the spread or range of the daily candle has been captured. This denotes the candle size of previous day and current day. If the previous day candle is NR4 or NR7, there is a high probability that on current day, there may be a big price movement for the instrument. Along with it, without changing the time frame to daily time frame, we are trying to visualize today's candle so that we can have an idea what can be the probable price movement tomorrow. If today's candle is NR4 or NR7, we already have an idea of the possible big movement tomorrow. Lastly, without plotting the inbuilt trend line, we are trying to get the glimpse of the trend captured by the trend line inbuilt. This is all about the indicator and how you can use it to analyze the instrument chart and get a fair glimpse of the possible price movement of the instrument. If you have any doubts, you may please contact me personally on my Telegram mentioned in the video, link. Thank you very much for your valuable time to go through the video. At the end, I would request you all to kindly like the video and subscribe the channel to encourage me to come up with more insights. Till then, stay profitable and stay healthy and happy.